Hello guys, in this video we're gonna see comparison between mutual funds versus ETF, which is better. Starting with mutual funds, which usually actively managed by professional fund managers. They try to select investments that outperform the market. Also, it tends to have higher fees, management fees often around 1% or more, plus sometimes sales leads, which are commissions. Also, you can only buy or sell once per day at the end of the trading days and net asset value price. Also, often it requires a minimum investment, usually between $500 to $3,000 or more. It often less tax efficient due to frequent buy-in and sell-in within the fund, generating capital gains distributions. Holdings are disclosed quarterly, sometimes monthly, but not daily, and often allows easy automatic investments and withdrawals on a schedule. Now, let's move on to ETF. ETF mostly passively managed, meaning they track a market index like S&P 500. Some ETFs are actively managed by that's less common. Typically lower fees, expense ratios often below 0.2%, and usually no sales loads. You can be bought or sold anytime during market hours at real-time prices like stocks, and you can also purchase just one share or even fractional shares via some brokers, so the minimum is generally much lower. Also, there is more tax efficient because of the in-kind redemption process, which helps minimize capital gains distributions. Also, holdings are usually disclosed daily, providing more transparency. And finally, ETF usually don't support automatic investment plans directly. You have to manually buy or use a broker's service. So, choose a mutual fund if you prefer professional management, want automation, and don't trade often. Or choose an ETF if you want lower fees, daily trading flexibility, and tax efficiency. And that's it guys. Thank you for watching, and please don't forget to like and subscribe for more.